Good morning, ladies and gentlemen, and we have an amazing episode installed today. We've got Pejman Ghadimi, who is the founder of Exotic Car Hacks and Watch Trading Academy. So everything to do with high-end luxury. PJ is your guy. PJ, thank you so much for taking the time to join us. How have you been doing?
Good, brother. I appreciate you having me on. Excited to be talking about all these cool things with you today.
There's a lot to cover today, so we're really excited to learn more about you and your story and your success in building multiple seven-figure businesses. So can you just start by giving us a quick overall summary, and then we can dig into more detail as we go through the stages?
Sure. We'll kind of start with the very basis instead of all the way back. People can always Google
Perfect.
stuff if they need to. But my background's in finance. I was an 18-year-old bank manager, and which was like a big thing back in the day. And then at 23, I was an executive VP for the same bank. By 25, I was fired and founded my own investment company called VIP Motoring, which was the first alternative asset management company that basically invested in exotic cars, watches, and art. And that's how we kind of got started in that model. Over the years, I then continued to build that company, and one day decided that that was a higher investment grade company that required a $5 million buy-in. It was not for everybody, but there was real value in teaching people how to do this themselves. I then started my online journey, learning how to basically build online companies through my first kind of passion project called Secret Entourage, where I authored a dozen books, including three bestsellers known as Third Circle Theory, Radius, and Gated Choice. And then through that model, that was more of a business website teaching entrepreneurship, awareness, and consciousness. And then past that, I decided to use that same technology background and understanding of marketing to kind of build online companies that would basically be teaching what I have experience in. Because I've always said I'm a teacher rather than a marketer, and I've always wanted to focus my life on teaching the things I had actually learned and was practicing rather than just from theory or from ideology or just from excitement. So I built these companies starting in 2014, 2015, where I started Exotic Car Hacks. Today has grown to over 15,000 members worldwide that basically learn the art of buying, trading, and selling exotic cars as a means of not only creating it's more of a wealth preservation strategy that basically teaches people to use these cars without losing money, and then an income, or should I say wealth creation strategy around watches with Watch Trading Academy, where it is the only uh, place where you can learn how to trade watches. And so therefore we now have, I want to say, over 13,000 members now in that particular community, doing really well. We have multiple tier programs, and we focus on, again, teaching the value of how to trade and invest in luxury watches as assets, things that I've been doing since 2005, but I've recently created for people to do themselves at home and continue rather than invest with me.
Fantastic. So there's so much to dig into there. So let's start with the car hacks. Most people that are uneducated or don't really know the way around the car world would go out, buy a car or lease a car and expect to lose a lot of money in the process. And that's kind of pre-programmed into people, I think, or the masses of people. And I really love the way you're doing it in terms of educating people on the specifics of what to do to find a deal where it'll hold value. And in a lot of cases, I've seen a lot of the case studies where people are actually making money to drive luxury cars, which is a ridiculous concept, isn't it? But when you put it
Mhm.
into action, it's very doable. So how did that love and business come around? Is that just something that you were passionate in vehicles and you figured out how to do this? Or can you talk to us a little bit
Yeah.
about how you came up with that idea and then transform
Right.
it
So
into
so I created car hacking basically when I didn't have a lot of money. When I was much younger, I was a normal 9 to 5 worker, right, in a bank, meaning I had a good salary, but I didn't have enough money to basically buy Lamborghini or Ferrari. And so I've always thought to myself, I have a finance background. I used to see clients finance cars all the time, and I was like, what do they know that I don't know? Why do really wealthy people finance exotic cars? How do they do it? What makes sense? And so I started getting curious about it, right? I started realizing that maybe they know something I don't know. Because I used to believe the conventional wisdom of if you can't afford it cash, you shouldn't buy it. It's gonna depreciate. It's a liability. You don't want to buy these things unless you're super rich. So I was always like, this doesn't make any sense to me. All these people are buying these cars, they're doing a certain way, and I don't understand why. Somehow they're still looking at it as a good thing, you know? So one of the things that enabled me to do was try to kind of get in the game by buying cars. And obviously, like most people, I lost a lot of money on cars time after time. And then one day, I made friends with a guy that worked at a dealership that basically like became friendly with me instead of just selling me a car, and agreed to go to lunch with me. And I basically kind of duped him into sharing their entire business model at the dealership at the time. And this was like way, way long ago. This was like, early 2000s, and he kind of shared all of his vision, how things worked, where the back end money was, front end money, how many cars they moved, how they were basically incentivized to lease cars. And I started realizing that there was a huge, obviously, business model behind a dealership, and that if the dealer was making money buying and selling cars, then why couldn't I just buy cars, drive them, and then sell them? And I realized the big issue was that obviously the difference between a dealer and a person is that a dealer buys a car to resell it with a dealer license. A person has to pay taxes and then obviously has to drive the car and enjoy it. So it changes the value of the car by adding miles to it. And so I kind of devoted my finance background to finding a solution as to how to avoid depreciation from miles added to a car, and then which cars were selected that would potentially be able to overcome this. And so through the years, I kind of started hacking my own way into my own exotic cars. First buying myself a 911 Turbo at 21, and then moving up to a Ferrari 360 Modena, to a Gallardo. And every year I would switch cars. And I started realizing that while I was losing a lot of money on cars before, the higher tier cars I was buying, the less money I was losing. And then with my Lamborghini, I basically was making money. So I was like, well, something's off here. Something's different. Like I kept a Mercedes for a year. I lost $12,000. I kept a Porsche for 3 years. I lost $2,000. So I was like, that doesn't make sense. That's, and I added 3 times the miles. So something was telling me that I was onto the right track, because the more I kept doing this, the better I was getting at figuring out which cars to buy, what mileage ranges, and so on and so forth. And I started realizing that there were 2 things happening simultaneously. The first one was I had figured out not a magical solution, but a technical solution to overcoming usage and miles. And the second thing that I realized was that the industry, the auto industry, had changed a lot from my perception of it. I always grew up with the fact that Lamborghinis cost a lot of money to maintain, and you can make mistakes and things cost tens of thousands of dollars. And I realized that was the furthest from the truth, and that perhaps these fears were the reason I wasn't acting in that space earlier. It was rather this fears of that people had put in my head that someone's uncle owned the Lamborghini and it cost them $50,000 to fix. And, I wasn't in a position to have a $50,000 bill for something, so I always stayed away. But when I started, the more I investigated, the more I participated, and the less I assumed, the more I started realizing that they couldn't be further from the truth. And that reality is that I was just ignorant. And with this expertise gained over the years, now almost 20 years doing this, I've gained kind of a system now that's been time tested, for the last, I want to say 15 plus years, that, has been used not only by myself, but by a ton of other people, both clients at first, and now by so many members, 15,000 plus members that are doing this in our community.
Yeah, that's fantastic. There's so many nuggets. If we just drill into a couple of them, I think we'll add loads of value. Is you were first curious about, hey, how are these other people doing it? And you actually knew more about finance at that point than probably most of them, because you were on the inside of the bank.
Correct.
And then you failed. You lost a lot of money on a couple of cars, but you didn't stop. I think that's where a lot of people would have just stopped, but you pushed through and you kept trialing and erroring until you found a way that made sense, that you kind of cracked the first part of the code. And then from that point, you figured out, hey, this is how it works, and doubled down on it from there. That's kind of the high level steps that I heard there. Is there anything that I missed?
That's completely accurate. I mean, look, we get into the world always expecting to have the same results as experts on day one, right? Like we look at a guy that trades real estate and we go, how did he make 300 grand on that building? That's crazy. I'm going to do that too. We don't think that, well, that guy learned to make 100 grand first, 200 grand next deal, 300 grand on the 20th deal. So if our perception of a program is that we're going to get in it and learn how to be a master on our first try, well, that's a delusion, right? And mastery comes with experience. It doesn't come with entitlement, right? So the more you practice, the further you go. And I think for me, the angle was I realized that the system wasn't flawed. it was my personal approach to it that was, because I was a novice, I was new at it. So obviously I wasn't going to operate at the same rate as that dealer was operating at. That was this particular salesman that was teaching me how their dealership operated. That was a like $1 billion dealership, you know, running like 600 cars a month. I was one guy running my first car. I was obviously going to lose before I gain. No different than a stock trader looking at the stock market saying that expert's making, you know, 20, 30% a day, and I'm trying to figure out how to make 10% a year. You know, like there's a significantly different ball game being played and a different leverage point. And I think very often we forget that. So we don't look at the 20 years of relationships and everything. And when we expect similar results, we're only cutting ourselves short, because then we give up on a good trail because our expectation doesn't match the reality of what we should have been in, because we fall victim to the idea of marketing in itself, you know?
It's so true. People want that, especially in the world that we live in today. I think they want that overnight success, that instant pill that just brings everything to you. And life just does not work like that at all. And they're kind of very short-sighted, and they want to see only the success on day one and not the 20 years of hard work that leads up to that point. And that's across all industries as well, right? Not just.
Yeah, I think one good thing to do is look at the overnight success pill as the overnight learning pill, instead of, like, I think the big difference between people today and people then, like, I didn't have access to programs like my own growing up, right? So I had to learn it by making mistakes, losing money, etc. Other people have access to this learning that I've now put together. Doesn't mean that they're going to gain my 20 years of experience overnight. It just means that they're going to get my 20 years of learning overnight. Now, they still have to go out there and experience it themselves. And they could, I mean, in my watch course, I know we're not talking about watches yet, but I have students that, you know, like on their year 3 are making 3 to 400K a year. I mean, it took me 10 years to make 3 to 400K. Like the point was that it took me 10 years because I had to learn. It took them 3 because they had the learning, but they still had to experience. So
The
the angle here
mentorship,
is
right? The guidance.
exactly.
So that's really a good point. And I think within your car group, you have a really good system in terms of where you then actually mentor the people and go find a car for them and place them into something that they want. And I think that's the equivalent in other industries as having a mentor or a coach that's been there and done that and able to guide you in the right way. Can you talk a little bit about how you then created that? Because I understand that the way you phrased it made a lot of sense to me, is that you solved a problem that you had yourself that you knew that other people would have. And that principle can be applied pretty much to anyone, right?
Yeah, I mean, it 100% can. I mean, I solved it for myself originally because I wasn't that well off, meaning I was a normal working person. I enjoyed cars. It was a passion. It was not about making money or preserving money. But part of my growing up, I've never had much money, right? I came from a wealthy family in Iran, and that lost everything during the revolution. And we went over to France and lost everything. And in 10 years, lost everything again to come to the United States. So I started with a very negative 10,000 baseline, you know, and I've learned very early on that I didn't have room for losing money in luxuries, but I certainly also wasn't going to settle for a peasant lifestyle without the things I wanted. So it had to be a compromise in between. So I used kind of financial knowledge to realize the power of what I call parking money. This is something that a lot of people don't really understand in the world of finance. Parking money simply means only buying things that won't lose their initial investment from a dollar standpoint. So in other words, you park money in a savings account, or you can park it in a watch, or you can park it in the car, depending on which one it is, assuming it's not going to depreciate less than what you paid for. Even if it doesn't appreciate, at least the investment itself is safe. The capital hasn't been killed, right? Like by either depreciation or something that made you lose your money. So very early on, I adopted this idea that if it was perishable, like, oh, traveling or like hotels and things like that, I wasn't buying it, you know, meaning once you pay for an airline, once you get off the plane, that ticket's done, right? Like meaning that money's gone. And for me, having limited money, I only chose for years to invest it in things that would hold its value. So I would always basically have a lot of money in a ton of different savings accounts, basically, even if they were in the form of a car or watch or something. But learning that has enabled me to open my mind to these industries, and that I've never met a poor exotic car dealer. I've never met a poor jeweler. And it opened my mind to how these industries worked. And ultimately, then only after I learned how to park money, I learned how to capitalize money and make it work, meaning first how to preserve it, then how to make it work. And through that model, I then realized that there were people wanting to do the same thing, because at the time when my first company, VIP Motoring, got really famous or popular amongst the local crowd, it was primarily because the financial markets were crashing. You know, in '07, people were starting to realize that, hey,
Alternative
'08 is probably
investment.
going to be a bad year. So they
Mhm.
were looking for an alternative to park their money. And it was at a timely manner, you know? And having done that, I also, as a finance guy, I looked ahead and I said, that's probably not going to last forever. Eventually, people will want to go back in the markets, will want to go back in the banks. These are all temporary. So I got to come up with some model to basically get out of, I can't do this forever. So while there was a great 4 years, I was like, I don't think I can sustain 3 to 400 million in revenue over the next, 10 years. I was like, what's next? And so I realized I combined, my love of finance and my love of education together and came up with these platforms, because I said normal people will want to do this too. And as the auto industry evolved and this became a more streamlined process, it just kind of was like the right time to start teaching people this, because the industry made it possible. Meaning it wouldn't have been possible if the industry was what it was 30 years ago. Meaning if Lamborghinis were still 20 cars a year being built, or that unique and impossible to get, it wouldn't have been possible for a normal person to buy one, drive one for free, never worry about repairs, and then get out.
Yeah, no, I totally agree with that. There's a lot to be said. And if we try to translate that to the people listening across multiple industries, it's learn your trade, become an expert at what you do, solve a problem that many people have, and then help them solve that problem pretty much, right?
Yeah,
And on the
absolutely.
parking the money side of it, I really liked what you said there, because um, specifically with the right vehicles, watches, and artwork, especially, I see it a lot more with my clients in art than I do in vehicles and watches. But it's the same thing, same principle is that you put in the money somewhere where it's hopefully going to appreciate, or educated historical indicators show you that it will appreciate in value, and therefore it's a safe investment. And right now in the bank, it's not making any money for you whatsoever,
Right.
right? If you look at interest rates. So this is where you get to use your money, enjoy an asset, and then move on to a next asset as well, rather than just leaving the money in the bank and it's not working for you at
And
all.
so the benefit of doing this with cars, while it's not as appreciative as art, for example, in the sense of making money, that's why I call cars wealth preservation instead of wealth creation, is that we as individuals buy cars anyways, right? Like if you're like doing well, I mean, if you're not poor, you're buying cars for leisure, in the sense that even if you're not buying a Ferrari, you're buying a Lexus, a Mercedes, a
Yeah.
BMW, and at some point you might say, "Oh, I'd like a Ferrari or Lamborghini or Porsche or something for the weekends. That sounds fun." If you're going to take aim at purchasing these things anyways, because that's what you do, you make money to buy things. So you get to a point where you go, well, why should I waste money on them? Meaning, not waste money by saying, I will deny myself the pleasure of having a Ferrari, but rather, what if you could still have that pleasure? And part of that money that's parked in a savings account could now be parked in this particular Ferrari. Like the enjoyment would still be there. And if the capital is safe, even if it's risk that, let's say $5,000 over 3 years is a risk on a 200K car. Well, I would argue you spend more than that if you lease the Volkswagen. So why not enjoy what you're going to do anyways, and make sure that the cost basis isn't something that hinders your growth, period. And while I agree also that art has a lot more upside, so do watches than cars. But here's the big difference between art, watches, and cars. Cars are much more pleasurable and much more mass marketable, meaning much more people are enjoying and using cars.
Yeah.
Watches are just like art, except the really different factor in watches versus art is the liquidity factor and the value segment. So art is valued based on what someone's willing to pay for it. So future value is usually like, oh, well, you paid, let's say, $10 million for this piece. Well, we have a buyer at 13. You made basically 30% of your money. But a lot of times, liquidity isn't always solid and strong at high numbers, meaning there isn't enough of a pool of buyers on a continuous basis. Depending on the art, of course, there are some pieces that are instantly bought by hundreds of people, but the pool of buyers is usually significantly smaller. So the liquidity factor is less. And then, of course, shipping a piece of art can be significantly different as well, especially with authenticity certificates and brokers, etc. But watches have a high liquidity factor. They're very, very easily transportable across country lines. And in addition to that, they sometimes yield returns that are like astronomical. I mean, I have watches that I bought for like $70,000 a year ago. Today are trading within an instant for 250,000. I
Wow.
mean, that's a huge 200K return on 70K. That's like mind blowing, you know? And while that's not the norm or the exception, it's kind of in between. This is a very common thing for 20 to 30% on a monthly or bi-monthly basis, which I think is very strong of an investment tool.
So seeing as though you mentioned watches, let's transition into the watch business and how you got into that. Is it a similar story to the cars, or can you give us kind of the overview? I know luxury watches and luxury cars go hand in hand most of the time anyway, but how did you get into the watch game? And you've already explained how that works or how that could work in terms of liquidity. And let's double down on that.
So it's the same pool of buyers, right? Like as a consumer myself of exotic cars, I wanted a nice watch. I was in finance. I was like, I'm gonna wear a nice watch, you know, like that's something that goes hand to hand with what you do. And one of the things that occurred at that point was to me was like, how can I make sure I don't get screwed in watches like I did in cars for so many years? You know, if I'm gonna get my first watch, I'm gonna kind of buy one that makes sense for me so I can park my money, just like I had learned to do because I already had my 911 Turbo, and I was like, it's time to kind of update and be with my first really nice watch. And one of the things that happened is I kind of started looking around to who are the guys trading secondary watches, what do they do? And there were only 6 or 7 at the time back in the early 2000s. Now there's thousands. I mean, I train probably 300 to 400 guys a month, you know, that have never heard of this. So there's a lot of people in this space now, but it's still far from saturated, to be clear. And one of the things that's really powerful was that I met a dude that was in my Porsche club that was doing this, and he was really good at it. I kept seeing everybody would buy watches from him. So one of the things that triggered for me is I was like, who are the other guys doing this? And I looked at them, and none of them were poor. All of them were really well off. They all had really nice cars and everything. And I asked them, I was like, do you have any other work, or is this your main job? They're like, oh, full time. So I was like, these guys are all rich doing this. So I said, I got to figure out, because I've never met a poor jeweler. So I was like, I got to figure out what angle exists in this that makes them so much money. So instead of just jumping in foot first and saying like, oh, I'm just going to buy a watch and figure it out, like last time, I learned from my own lessons. And I said, let me do some digging around and understand how people value these things, if people are talking about what these things are worth. And then I realized I had found a Panerai watch that was basically worth $300 less than what this guy was offering it to me at. And I said, $300 is easily something I can lose, so I don't care. You know, like, so if I can enjoy the watch, pay 5,000 and basically have, you know, a $300 room for error, I was like, that's fine. Like if I lose $300 after 2 years of wearing it, what do I care? And so I decided to pull the plunge and just buy it. And I decided I'm just going to list it and sell it. And whenever it sells, I'll buy another one, you know, so I listed for more, and I left it. And 2 months later, someone wanted to buy it from me. And I was like, fine, take it. I loved it, but I don't care. I'll buy another one. And I kept doing this with every watch, and first as a hobby. And then I started realizing, wow, there's a lot of, like, every time I'm making something on these watches, so I'm not really losing, and I'm enjoying them for free. So first it was more like I want to wear nice watches and not pay for them. But then I started realizing as I had more money, I was like, well, why don't I just buy 3 to 4 watches at a time? And if I can make even a sale a month from one watch, I'll make an extra $500,000 a month. You know, why not? So I started doing that, and I started realizing these dollars going up. And so it made sense when I started my investment fund for cars, watches, and art that we include watches. We started with cars based on the recession really hitting that market hard. We followed with watches, and then got into art. But it is to be said that one thing I realized through that business was watches are heavily recession proof. So they're just like gold. They're basically like not really hit by the idea that markets crash. So it is true that there are less customers at time, you know, for certain watches based on the markets, just like cars. But unlike cars, they don't take a hit, man, because this is a global currency basically. So even if you have like a bad time in the US over a 3-year period, you probably have a booming economy in Italy or in China or something during the same 3 years. And the inventory just shifts over to those countries and comes back after. So one of the things I've realized is that it's a very recession proof, solid, high liquidity investment vehicle. And I realized that very early. So I've kind of traded since. In my best year part-time, still made over 900 grand trading watches. This year part-time, just 10, 15 watches a month. I'm up 600,000 so far in the year. So I'm going to break my record. And yet this isn't even my business anymore, meaning like I'm mainly teaching others how to do this. I'm only doing it part-time because I enjoy watches personally. And it's part of my brand to be with cars and watches. So I have my own car collection and watch collection, but even not even trying to do it, it's still one of these passive slash good investments that keeps, coming back at you. And it's very easy once you're good at it.
And for all those people listening, we'll put the links below so you can reach out to PJ and get to the website if you are interested in learning more on watches or cars. And then you also mentioned artwork. This is a little bit more of the world that I'm semi-familiar with. How did that then come about, or was it just a natural transition from the watches to art?
Yeah, so this was, well, it's like I said, the same pool of buyers, right? Different levels to the game. Like I always say, we all play life with a different zero. Some of us with extra zeros, others with less, right? Depending on how many zeros you're playing in more fields or not, You're playing the 100K range and you're playing with cars. You're playing the $1 million range, you're playing with watches and cars. And then 10 million, you definitely have to incorporate more stuff, right? And for me, one of the things that happened with the art is during that transition when I built VIP Motoring, I had a client that was big into art. I wasn't at the time. I didn't know anything about it, didn't enjoy anything about it. But he started telling me about the speculative world of art and how it works from a buy and sell standpoint. And he was telling me about art gallery margins and, how they get their pieces out there. And so I kind of got the ins and outs of it and understood how it worked, when art had real value versus hype value, and kind of the history behind, what historically did well. And so I started in that space, early on. There wasn't enough of a demand for me to create a course around it, partially because it's a very niche world that very few people play in, and it wasn't mass marketable enough for me to create a whole ecosystem around it. There wouldn't be enough clients. And usually people that deal in art tend to have art dealers and art brokers. Very hard to be like, do it yourself. You make $20 million a year, but why don't you sit there and figure out how you can save 50,000 on this piece? They just look at you like you're crazy. So I figured like art wasn't enough or good enough at the time to build a course around it. However, during our time at VIP Motoring, art was really, really lucrative in the sense that we didn't have enough watches and cars to buy. I've always said in a world where opportunities exist, money is basically infinite. There just aren't enough opportunities. You can always find money to buy the right opportunities.
Yeah.
The problem is you run out of opportunities to buy. I mean, ask any single real estate person in the world, right? Like if you have a perfect building, you'll always have investors. You always have people that'll cough up, right? Because anyone looks at that deal and goes, yeah, I'll take it. Like I'll take the margin and you do the work. The hard part is finding the inventory. And so when the progression was, when we ran out of cars and watches that made sense at the right dollars, we started looking at distressed art in terms of collections. And since he was in that space, it made sense to kind of bring him on board as kind of the connoisseur of the art and the units and the dollars in terms of what was worth buying versus what was really a dud or not.
Yeah, we do a lot of work on the art side of things with capital gains and saving clients millions of dollars on the capital gain side of art, because like you said, it appreciates at a ridiculous value if someone wants to buy it, right? It can get
pretty... I mean, you can triple or quadruple your money, sometimes even 20x it, depending on what you paid and what it's worth to the next person buying it.
Fantastic. So if people want to reach out to you, PJ, I think it's a good time just to share your websites and talk a little bit about the training videos that you do in the Watch Academy and in the Exotic Car Hack, so they can get a better idea of what both courses look like at a high level.
Yeah, sure. So to follow me on social, simply go to I Create Millionaires on Instagram. It's the easiest way to reach me personally. If you have questions or anything else based on hearing the story here on this call. But the two websites that I encourage people to visit is watchtradingacademy.com, where basically you can join and start to learn. Not only I have a free training for people for about 60 minutes for people that don't know if watch trading is for them or not. It's watch trading and investing, and it breaks down all of the necessary step-by-step guides on how to actually buy your first watch, trade it, and learn how to repeat the process, which brands to buy, what to look for, how to price watches, how to avoid fakes and things like that, and get started. And then the better you get at your trading, the more you can advance through different levels of trading and courses, etc. And then for exotic cars, it's quite simple. It's a wealth preservation strategy and very black and white in the sense that I teach you the concepts of learning how to do it. So not just, hey, buy this car at this dollar, but rather really teaching you how to value cars, how to understand which cars are going to go up in value, go down, how to read depreciation curves, and also understand how to protect yourself against losing on high repairs or buying the wrong car or even high insurance rates. One of the biggest misconceptions in the business is that ownership of these exotics is very expensive yearly. You know, there's a huge cost between repairing your car, paying insurance, and these things. And the reality is, I can tell you that I've spent less than $1,000 for the last 2 years owning a $500,000 car that I almost daily drive. And every car I've had in my garage that I still have, like I have over 16 cars here right now, every one of those cars cost me less than $1,000 a year to maintain, which is just basically an oil change at the most. And simply because I've used the same strategies I teach to acquire them. And same with insurance. Most of my 300K cars cost me less than $600 a year to insure, which is crazy for Florida. But again, if you know the way, the point is that you need to stop listening to what people thought they knew about exotic cars and start really getting into the gist of understanding how real owners are using these strategies to get in and out of their real cars, not just their imagination of what their grandpa told them about their uncle and their old Lamborghini 20 years ago, you know?
Yeah, there's a lot to be said. And one really good thing as well that I like about your course, PJ, is you've got a lot of great referral partners as well. That is a network. It's not just, hey, we teach you how to buy and sell the car, but we also have people that transport, insure, and everything around the vehicles just to make it really easy for the clients that are coming in and learning. So I think that's a really good additional support tool as well.
Yeah, I mean, I spent 20 years accumulating these resources that felt like it made sense to give people access to them, especially since I've weeded out the good and the bad in the industry.
Fantastic. So I like to end with one question, and is if you had to pick between these three factors that contributed most to your success, how would you rank them? And that's between drive, skill, and luck.
So drive is definitely my number one, like that more than anything else. And I think skill second, but I think mastery more than anything, because I've committed to the same skills for the last 20 years. I think that's the difference in my story and many others is people always find something new to jump on, like the next thing or the next Bitcoin thing or what are they doing. And listen, there is money in everything in the world. The question isn't, can you make money in it? The question is, are you willing to commit your life to doing it? And I think that's the question people aren't asking enough. And for me, I've always committed my life to teaching. So what I teach changes, perhaps depending on what I've learned or experienced in my life, but teaching doesn't. And I've always been linked to finance. So money is a big factor in my businesses. And so linking those two has always been the same thing that's enabled me to master it to the stage I have today. And so I think that's why I would say skill and mastery are really second. And luck, I think that I label luck as laboring under correct knowledge. So kind of links the first and the second one anyways.
Fantastic. Great. Well, PJ, I think that's been really useful. Thank you so much for sharing your time and knowledge with us, and look forward to keeping in touch.
Yeah, thanks again for having me on. Good luck to everybody.